I'm always reminded when people talk about property of what my mentors taught me day one in the business. And there's two things, and they're almost rules of life. Number one, there's only truth in numbers. And number two, success is just repetition. So I always start with repetition and trends. And it comes right down to our daily lives. And, you know, probably the best example, and I'm really proud of this, we had a record number of custodian clients this year, that is 2017, who entered the CATS Challenge. And the CATS Challenge is no caffeine, alcohol, tobacco or sugar. And I often say, if you want to change your life, start by changing your diet. We had a record number, and the benefits of that repetition, no caffeine, alcohol, tobacco or sugar, for 30 days, as the majority of them went on, are just astounding. And the emails I get from clients, amazing. But take that philosophy right through your whole life. Success is repetition. That comes down to your daily habits. And there's only truth in numbers. So we need to measure everything. And that's really where I want to start. And I put up behind me the numbers of the median house price growth on the East Coast. I really just want to talk about Sydney, Melbourne and Brisbane. If you've got property in Perth, custodian property in Perth, I really just want to say what I'm doing. I'm keeping my Perth property to go through this cycle, but it has lost ground because the mining boom has gone through its major phase there. Perth will come back. When mining comes back. That's all I can really say about Perth. But let me talk about trends that we can measure. And what I've put up here is 1986, 96, 06 and 16. And it's really important we use this as our benchmark because these are the facts of the numbers of what's happened. And what you'll see is Sydney always leads the way and doubled or more than doubled every 10 years except the last 10 years. And really the blip there is the GFC. Melbourne similarly, and Brisbane certainly, if you go back to its benchmark in 86, however, works on a different access point. So what you'll find is that Brisbane starts, actually its access, if I went through to 1998 or started in 1988, Brisbane would have doubled and doubled and doubled and doubled. Now, they're the facts on what's actually happened. And what I would say from that is we're in a pretty normal cycle. That's all we're doing. You read about Sydney's too high, prices are too high, houses are unaffordable. Let me tell you, I read about that in the last cycle, the cycle before that, the cycle before that, and I've got clippings from the cycle before that. In fact, I keep a clipping on my desk in 1971 or 72 of house prices have reached $12,000, are now unaffordable. No one's going to be able to afford a house. And it's because a lot of people don't actually see the future. And the future is a trend that is moving forward, with or without you, sorry to say. The question I've got is, and this is worth you thinking about. There are 5 things that have changed during the course of the last 30, 40 years, thereabouts, even though the trends have been maintained. But some of the changes have happened in the last 10 years. What are the 5 things? That's the real question. So I want you to take 15 seconds to think, what would the main 5 things be that have actually changed in the last 10, 20 years that have made a fundamental change that will change these numbers? What are they? What's changed in Australia? Got the answer? Well, let's go through them. Number 1, the big change, population. That's the big change. Number 2 that's changed, finance. Been some changes in finance. Number 3, we have new buyer groups entering the market. Now, these are changes we've never seen before. So if I measure the last 30, 40, 50 years, these are changes that are happening in the last 10 years and then will happen into the future. Number 4 is the education revolution. And make no mistake, it's happening and it's coming, attached to population. And number 5 is land size. So let me go through these things, because it's really important. If you are designing your future, you think about these changes and then you put yourself ahead of these curves. And this is the whole point of, and the reason I wrote 7 Steps to Wealth. Step 1, buy land for growth, because I knew that land size was changing, but I didn't predict 20 years ago that land sizes would be down to 100 square metres a block of where I think it will be now in the next 20 years. But let's get to that a little bit later. The big change, increased population growth. And the increased population growth is not only Australia-wide, but the migration is really moving to the capital cities, particularly on the East Coast. And the third big change is the percentage of women entering the workforce. Now, we need that. Australia needs that. But it changes the dynamic of things a little bit, because 30, 40 years ago, we had 3.4 persons per household with one income earner. Today, we have around 2.3 persons per household with about 1.6 income earners. And that's why when everyone measures affordability based on 20, 30, 40 years ago and measures it using the same access points, it doesn't have any meaning to me. You really need to measure it on the actual household disposable income, or household income, not even disposable income. But let's get down to tin tacks on that. We have a population of around about 24.2 million, thereabouts. It grows last year by about 350,000. Now that's massive in itself, because if I go back from 86 to 2006, we were growing by 224,000. The big kick was in 06, the floodgates opened for immigration to come into Australia. And this is significant because we went from an average migration intake of 90 to 100,000 migrants a year to now 250,000. And yes, our population growth went from 220,000 thereabouts up to 350,000 average for the last 10 years, 06 to 16. Now that is over 50% population increase just in the growth. But it's the forecast that interests us, because the forecast of that growth is it will increase to 415,000 average for the next 10 years. We haven't seen these numbers before, and it's really important you digest those numbers and make some decisions about how to take advantage of those numbers. Really important. And it's been slow the uptake because the migration came in from 06, but it created a new buyer profile starting about 12, 13, 14, 15. The other big thing we know about migration is that it's coming to the capital cities. So yes, it's Australia-wide, but the majority of the population growth is going to the capital cities. And we have more women in the workforce, so we have more disposable income. That's why house prices are and can afford to go up. What's the difference? Well, in 86, we had about 37% of the workforce was women. Now it's around 45, 46%. They're significant changes, massive changes. The interstate migration, or I should say the capital city migration, is significant though, because we're talking about Sydney growing by 36% between now and 2040, Melbourne growing by 44%, and Brisbane, that Brisbane Southeast, growing by 50%, 49%. So those numbers again, 36% for Sydney, greater area, 44% for Melbourne, and 49% for Brisbane and that southeast Queensland corridor. So that's massive. That's the hot spot from our perspective. What's the big change? Remember, if I go back to the last 30, 40 years, median house prices all but about doubled in those capital cities. But today, in the last 10 years, we've seen a 50% increase in population growth, and the majority of that's going to the capital cities, which means that the increase there is much more pronounced than any other areas. And I'm not just talking about the East Coast, because we want to be in Adelaide and back into Perth, but at the moment, I'm using the East Coast as your template for a study, for a historical study, because the data there is so reliable in relation to the cycle. Quite amazing. Point number one, population growth. It's a major game changer. You don't read about it in the newspapers when they talk about housing affordability, all that sort of thing. But it's the major game changer. It's up 50%, due to rise and continue to rise to 415,000, from 350,000 to 415,000 average over the next 10 years. That's massive. And what's interesting about that is that the Australian Bureau of Statistics gave 415,000 as its B series, but the A series was as much as 480,000. So the bandwidth could be much higher. And why I point that out is that they were wrong in their 2003 series by more than 50%. So they've been well under what we've actually achieved. Number one, population growth, and that's the key to us, because it affects number 5, which is land and land size. Number 2, finances changed. Now, when I started in the 1980s, I was borrowing money at 15%. And those of you who had houses back in the 70s and 80s, you'd remember double-digit growth. In the 1990s, we got down to single-digit borrowing power. Now, that was a major and significant change. And then we had the GFC. What that exposed was one thing, and that is that Australia's an island and we run out of money. We really run out of money. So now what APRA are doing, and they're doing it today, is they're changing the lending criteria for investors. Now, this is significant because it may mean in the next 2-3 years, your ability to buy that 4th, 5th, 6th property is significantly diminished. As I've always said, whatever you can do, do it now. APRA are talking about reducing the LVRs to around 60%. I should say the Reserve Bank and the Treasurer, everyone's talking about how they can stop investors, because investors are driving the market. But investors are driving the market because we've got so much migration, so much demand. It really is incredible. So number 2 is finance. That's the big change in my opinion. The third biggest change that we've never seen before, and this is the one I've got no real forward data on, and that is we have 2 new buyer groups in the market. Now, I can go back to the 1950s, 1960s, the median house prices doubled or thereabouts every 10, 12 years, something like that in most of the capital cities. But it was only in about 2010 that a new buyer came to Australia, Chinese. So this massive opening of the Chinese market, that is now spilling into other parts of the world, and Australia is a big recipient. But to tell you the amount, there were around about, in 2010, 1,400 Chinese transactions. It's grown to over 13,000 for 2016. So it's grown by 1,000% in 6 years. It is massive. And now reports are they're buying between 20 and 40% of all new stock. Why are they buying? 2 reasons. They want to get their money out of China, and 2, they want to get their kids out of China. And that's the other big recipient is education. We have double-digit growth of Chinese students coming into Australia, and education is our 3rd biggest export. So it ticks on to the migration, and I'm going to talk about that separately later. The second point of a buyer group, the new buyer group, is superannuation. Now, superannuation is the sleeping giant in Australia, because if I add up all the amount of money that Australians have in the bank today, it adds up to around about $700-800 billion. But we have approximately $2.5 trillion in super, and that's due to go to $6 trillion by 2030. So these are massive, massive numbers, massive numbers. That means that's a huge buyer group. Now, within superannuation is self-managed super funds. that makes up today around about $700 billion, and that's a big buyer group of residential property. And it's beginning to have an effect in that market. The point on this is there's these two new buyer groups. Certainly, Chinese is not going away, and it's going to compound the demand for real estate, and particularly land, which I'm going to get to. Point 4 is the international education and jobs. So our population's changed, and there are changes going forward, but it's not only that migration's come in, we're an ageing population. So what that affects is two things: education and jobs. The government smartly have said we need to bring students into the country that go to our schools and go to our universities that then become a skilled workforce to replace our retirees. We have about 5,000 Australians every week turning 65. That's going to increase to nearly 6,000. So this is massive. That's why we need 250,000 migration today, overseas migration, but soon to be 300,000. But on the back of that, two things are happening. Number one is the government is giving incentives to bring in overseas students. And this is really becoming an industry. It's our third biggest export. And most of the major schools now around Australia have an office overseas, particularly in Korea, Japan, and certainly China. And the number of students coming from China increasing exponentially to a point where, if I talk about it, the number of students that came from overseas just last year was up nearly 70,000. Just in 1 year. It's massive. So today, Australia has over 700,000 international students in the country. Now, that's a number that could go up significantly because of the two things the government did, or I should say two visa classes the government introduced in July last year. The 500 and 590, which allows Chinese to bring 6-year-old students here with one guardian that can get a 2-year visa revolving for up to 12 years so they can bring their kids here. Now, that's massive because there's 45 million kids in international or private schools in China, and they're paying double or triple what they would pay to go to a private school here. That is brand new. Watch the space of education. What am I doing? I'm buying land around schools. And the second thing is hospitals, because that's the other big change. That is the jobs and where the jobs are actually going. The industries that are changing are healthcare and manufacturing. If I show you the numbers on it, it's quite amazing where healthcare is up while manufacturing is down. Healthcare is up over 14%, nearly 15%, and manufacturing is down nearly 8%. It's significant. Because manufacturing, remember, 30, 40 years ago, was the lifeblood of Australia. Now it's making up less and less. And in time, healthcare will employ just under 1 in 5 Australians. Just under 1 in 5 Australians. So that's massive. What am I doing? I'm buying land around hospitals and schools. Hospitals and schools, because that's the key. And now let me talk about the real key. The average lot size has gone from, when I started, around 800 square metre back in the 80s to today 424 square metres. And I'm going to tell you that in 20 years it'll go to 100 and something square metres. 100 and something square metres. The simple takeaway for you, if you're building a future for yourself, that is a retirement future, you want income, get land 300, 400, 500 square metres, close to schools, close to hospitals, close to transport, because in time that will be dual and triple occupancy. Simple as that. So your return rates will double or triple. It's as simple as that. Remember, land is the best performing asset. And I'll give you the numbers on that. I was buying land. I'll take a suburb like Pimpamar as an example, because we're in Pimpamar today and we've been there for 20 years. 20 years ago, land in Pimpamar was $66 a square metre. Today, land in Pimpamar, $620 a square metre. Now, you can't show me anything that's outperformed annually that growth. Yes, you'll pick a share that's gone up but may have come down, but continues to outperform that growth. And not only that, let me give you the numbers on that, because we were putting clients into Pimpamar. They were buying 900 square metre blocks there for $66 a square metre. Today, you can do blocks around Pimpamar that are 120 to 150 square metres. You know what they sell for? They sell for over $1,000 a square metre. So the smaller the land, the bigger the price per square metre. And that's really the major takeaway today. The key, do something about it. We're in the middle of a boom. Sydney is well run. I think it's got about another 10% growth. I think it'll go from 990 to about 1.1 million. Melbourne's well on the way, but I think it's got about 25 or 30% more growth in it, particularly in the outer areas. And Brisbane's just starting. And the big key to Brisbane has been the starting of the Brisbane Casino. And if you're ever up in Brisbane, go and have a look. It's 10 blocks in the centre of Brisbane where they're building the biggest private infrastructure project that I've ever seen in Brisbane. Will employ thousands and thousands of people, but like it changed when Melbourne built their casino, this will change everything. Buy property is really what I'm saying. Where to buy? Today, Melbourne and Brisbane. And get the uplift in Melbourne. Those of you who bought in the west of Melbourne, your land went up 31% last year. You've kicked a huge goal. So if you're already in that market, guess what? You've kicked a massive goal. And that was land, by the way, in the west that clients said, oh no, people aren't going to go there. It's exactly like Sydney. They have to go to the west. Why? Because it's affordable. And certainly, it's where the money is being spent by the government. Melbourne today has the highest population growth because it's getting the majority of the overseas migration. It's forecast to grow to nearly 8 million by 2050 and will be probably Australia's biggest city by that time. It will overtake Sydney. I'm really hot on the areas in the west, which is Brookfield, which is out near Melton in the west of Melton. Why? Because of the price. House and land packages there for under $400,000. Land's small, but the rental return is good. It's positive cash flow. So it's a really good one to put in the bank because if you've got a low BC, you can buy into it and you've got positive cash flow. And I think the population growth there is like 7-8% per annum. And that was the one where land went up 31% last year, but it's still really affordable. The land is still only $560 a square metre. Remember, we were in Sydney in places like Edmondson Park, land went from $400-500 a metre to $1,200 a metre. So there's a lot of room for growth. So if affordability, get into the Melbourne market if you're not there already. Brisbane is the other big area, and the casino there is the game changer. It started now, and believe you me, Brisbane is absolutely killing it now. The largest number of infrastructure going on in Australia, 41 projects totaling over $51 billion. So it really is a hotspot, and they're creating jobs there. And now we're seeing interstate migration double on 2015 and double again on 2016. So we're seeing things actually get coming back. Two areas. One is Ormo, which is that Pimpamar area. Why I'm hot on this area is because Westfield are building $1 billion shopping centre just down the road and land under $600 a metre and good size, 420 square metres. And I'm building a house right in that Pimpamar Ormo area. 5 new schools or 5 recently built schools in the last few years. Great rail and, as I say, shopping, just amazing access to Brisbane and the Gold Coast. A really good area. If you're not already there, I suggest you get in there. And even if you're there, get multiples of property there. The other big one is that west of Brisbane. Now, this is really good because this is 600 square metre blocks, average of $320 a square metre in Red Bank Plains, and only $420,000. Why is this attractive? Because of the block size. You're just not going to get 600 square metre blocks in high growth areas ever again. And remember the key, you're cash flow positive. Probably the biggest takeaway point I can give you from an urgency perspective is that now we're seeing growth come back into the Australian economy. So these interest rates will go up. I have just locked in the last of all of my rates on 3 to 5 year fixed rates. Why? Because absolutely clear that in the second half of this year, interest rates will go up. And when they go up, they won't go up, so you're borrowing today at say 4 to 4.5%. They won't go up a little bit, they'll go up by a full 1%. My advice, borrow whatever you can and lock in your rates, because today you can buy property that's cash flow positive, and most importantly, you're buying land at a really good affordable rate. At the time when Australia has the fastest growing migration and population we have ever seen in our history. And land size is coming down. Land's the key to your wealth and key to your growth, and that's the key to your retirement. So the big takeaway is that follow the trends, follow the numbers, but take away one key point, and that is we have the biggest population growth on the back of migration in Australian history. That is reducing land size. So you're going to see land per square metre go up exponentially. And we have this new buyer group entering the market, and you've already seen it, the Chinese, but also self-managed super funds, but they're just starting. They're just starting. So in 10 years' time, you'll look back and say, wow, I heard this stuff, I did something about it, I didn't do something about it. And what I'd say to you is, whatever you can do, do it now. If I look back over the many, many thousands of clients I've coached, the one thing they all say to me is, I wish I had done more when I could. I look forward to working with you all. Thanks for listening. Cheers.